Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to try and get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the overall markets, with a little market analysis, maybe sprinkle in some geopolitical fodder to round that all off, and then talk about some option strategies we could implement into a portfolio based on those assumptions we come up with in this analysis. All right, so let's start it off with some economic data. Now, we've been talking about the manufacturing numbers. This week, we are going to get Richmond Fed later on this afternoon. We've also been talking about these Fed governors talking. We've heard from Williams earlier this morning talking about interest rates. Looks like the Fed fund rate is going to go up to around 3%, 3 to 4%, folks. That's going to be your baseline there as they're trying to slow down this inflation, slow down the economy a little bit, which is what's going to happen with raising interest rates, try and staff off some of this inflationary aspects that we're seeing right now with the demand not really letting up at all, because you've heard me talking about these wholesale inventories, right? We're seeing manufacturing ramp up here in the summertime, and I was like, hey, it's a little early to be ramping up on manufacturing, especially if we're going to be seeing a slowing economy. Well, wholesale inventories came off a little bit, which shows that these manufacturers, while they are ramping up production, even in this time, are moving those inventories throughout the summer, despite the fact that we don't really have this high demand seasonality of summer happening right now. Folks are out there buying. Wholesale inventories came in at 2%, expected to be 2.1%. They did rally, or they did mark last month's number up 0.1%, kind of erasing that headline number. But I think that headline number is going to be the overarching thing that folks are grabbing onto today, because that is a pretty darn good number. We get Richmond Fed a little bit later on this afternoon. Some retail sales numbers coming out of Japan and things like that, names that really aren't going to matter. Japan, Austria. That's about it. Consumer confidence out of Japan later on today. But tomorrow we start really seeing some economic data coming in. We got the crude oil inventories. We got all kinds of Fed governors speaking here in the United States and over at the ECB. I think Lagarde is speaking as well. So tomorrow is going to be chock full of economic data and Fed governors speaking. Like I said, Williams was speaking earlier today, and they were talking about Fisher the last time when he was using an analogy of baseball, saying we were in the ninth inning of this whole cycle and everything else, and the market's really freaked out for a moment. That has to do with really the Fed trying to be very transparent, not allowing temper tantrums, taper tantrums, any of that stuff happening in the markets. So they're trying to be very open as to what's happening going forward. I heard that whole analogy brought up again earlier this morning, and they said they don't know that we're in the extra innings or anything like that, but we might be in a new game altogether. So we always have that going back and forth. Let's take a look at the overall markets right now. We've got crude oil making some moves to the upside, getting above that 50-day simple moving average. Yesterday, we settled what looked to be just slightly below that, but we're breaking above that again today. As it acted as support before, it should act as resistance now, and it didn't. So that resistance, well, it acted a little as a resistance yesterday, but today it is off to the races to the upside. Now, one thing I've been talking about this, oh, look, 11, 11, 11. So one thing we were talking about this is that crude oil is going to be one of those things that makes or breaks this economy. We start seeing crude oil start to rally. It's going to be very difficult for the rest of the markets, like equities, to rally. Gold futures, I really don't have a whole lot to say about gold or Bitcoin, because they just are not acting like I would expect here. Bitcoin being below 20,000 a couple of times is probably setting off the alarm bells for a lot of folks. But keep in mind, we do have a support level here, 18,000. I'm going to call it 250. We want to stay above, but 18,330 is what we got here. That has acted as a resistance in a sense. We haven't necessarily gone down there and like smack dab cranked on it, because that 20,000 right there is the psychological level everybody is focusing on today. Right now, above that line in the sand, we need to get some folks in here really stirring the pot up to get this market to move. Right now, it seems like a lot of folks are raising capital by selling Bitcoin or some of these ETFs that are crypto related, because there were some margin calls. When volatility really starts spiking in these products, especially in the futures, they're going to ask for more margin for those futures. That causes an immediate sell effect. And I don't know if that's necessarily what's been going on in Bitcoin, but that's some of the rumors I'm starting to hear, is that was one of the first legs to drop, was anybody that had exposure to cryptocurrency. These volatile aspects started covering that caused the ETFs to go, and a lot of folks started folding their hands, which when you're trading the ETF, they're going to have to trade these underlyings as well. We got VIX finding bottom, maybe. It's feeling a little toppy, something we're going to keep an eye on here today. It's nothing that we can really come away with right now, because all of the markets with the equities have this bit of an indecision today. So even though we're looking like we're confirming a top on indecision, remember, anytime indecision there, it's the bulls and the bears battling it out, right? We want to see who wins. Now, it's not a very good candle. Usually the candles I like to see for something like this are going to be a little bit more defined, and we're not necessarily getting that right now. Let me get my pen over here. Let's just do a white pen and do something here. All right. So one of the things that we're looking for with these candles, they could be red or black, or red or green, I should say, but basically a candle like this at the top of that move, or one that kind of looks like that, where the indecision lands at one of the extremes. Now we're getting a candle that kind of looks like this. Yes, that is indecision between the bulls and the bears, but very difficult to discern. Usually these kind of patterns, where we're getting right there, looks to be more of a continuation pattern to the upside. So if you want to look for some silver lining there, it looks like we are getting a bit of a bullish pattern or a continuation pattern to the upside, maybe to go up and test the 50-day simple moving average today or something. We could rally high, pull off. Today's candle, I think, is going to be really indicative of what is going forward for the rest of the day here in the market. So let me erase all the pen. There we go. All right. Dow Jones Industrial Average, real day of indecision. As a matter of fact, there's not really much of a candle there at all. That one would make me believe that it's more of a topping pattern, just because there's a longer wick on the top, and indecision is more geared to the downside here. But we are getting a candle that is not confirming this as a top, and I think we're going to get that kind of messy patterns today. We get a green candle finishing above the previous day's high. That's continuation pattern moving to the upside here. Basic settled below today's settlement is going to make it look like we're starting to roll over. So today is the confirmation day, if you will. But I don't know how strong of a pattern this really is. Just doesn't feel very strong, because the rest of the markets are kind of discounting those tops there. So we could kind of do this again as well. Just not a very great topping pattern there. It is a day of indecision, but not something that would get me to jump on board right now, other than to be looking to sell some covered calls here. Anytime we get these rallies, we're in a bearish pattern. Well, we're getting some moves to the upside, getting some indecision at these levels. That would be a place where I would look to start to cover some stocks that I had owned in my portfolio, lower that overall cost basis. I think right now is the time to do that, folks. All right, overnight inventory, it's going to probably be a little bit strong coming into today. I would say it's long and strong with the economic data we got. I wouldn't see there's any reason for folks to not try and maybe look to add a little stock to their portfolio right now. I would not be going full both hands, buying with two tranches. I'd be looking to do a half a tranche or a small tranche for layering on some of these underlyings. I think we're going to get a little move to the upside, but as the day goes on, I think that we're going to start seeing the market slowly wither, if you will, on its strength, just kind of like what we did yesterday. Yesterday, we got a little bit of strength off the open, sold off economic data, got that rally I talked about. We're going to get a bounce off the open because of the economic data. And then, people are going to mull over that the rest of the day and probably see some weakness. I think we could continue to see that type of pattern in the morning as not institutional trader, but more retail traders are starting to go fishing and looking for some bottoms here. And that's why we're going to see some lift off in the early mornings as these folks try and get ahead of it. And then institutional traders may be selling into that strength later on this afternoon. All right, that's the way I see it happening right now. I've got a couple of stocks that I'm going to be talking about with Target. I don't think I have Target up here right now. Another thing is the oil stocks have been sliding with oil. Now we got oil starting to make a move to the upside. The signs for the turnaround here in crude oil is starting to look pretty strong. Well, if the crude oil market or the crude oil sector is going to be strong, that's going to lead me to believe that the broader markets are going to be a little bit weaker. I'm already hearing folks at restaurants talk about their ticket sales. Their size of their ticket sales has gone down quite a bit on average, and we still aren't at necessarily full capacity. Yeah, we got that big flux of folks coming out after the pandemic, slowed down a little bit. I've been talking about the roaring 20s and the roaring 20s here in the 2000s because of coming out of this pandemic. It's feeling like that's getting slowed down here a little bit with the velocity of money. So I don't know if the roaring 20s are necessarily going to come back. I do think that people are going to have looser pockets, if you will. Won't have the gator arm. They're going to be able to reach into those pockets and spend a little bit. But I do think that all of the little ancillary things that we buy on a daily basis that's now going into the gas tank because we're paying so much there, well, that's going to hurt the economy going forward there. And that's about all I got for you guys. Make sure you guys are subscribing, liking, doing all that stuff. Really do appreciate it. That's about it, folks. If you can't take that, take it easy.